Thank you, Paul, and good morning, everybody. I'd also like to extend my welcome to you today and acknowledge the Wurundjeri people as the traditional owners of the land from which we're broadcasting this morning. As already mentioned, the ongoing pandemic has created challenges for all of us. And while many uncertainties remain, there are good reasons to be optimistic about the economies in our key markets. Hopefully, high community vaccination rates will contribute to a rebound in summer trading and deliver a substantial economic bounce in the coming months. And while the initial damage of COVID has receded and life is slowly getting back to normal, the emergence of the Omicron variant in the last couple of weeks is an important reminder that unpredictable challenges remain. There will be new variants, and governments will need to take the necessary steps to adjust to living with the virus. Now, there are also COVID-induced labour shortages and supply chain bottlenecks with which we will all need to contend with. As we know, when confronted with rapid change, many in the community will adapt and thrive, but some will continue to struggle. Fortunately at ANZ, our strong sense of purpose, our robust balance sheet and the experienced management team mean we're well positioned to help customers through this uncertain period. Now, whether it's our support of government-backed loan schemes or working with individual customers on what's right for them, we'll continue to support customers and the economic recovery of Australia and New Zealand and all our markets. Now, Paul has covered our financial performance in some detail, but I want to give my perspective on how we performed in the financial year of 2021, particularly at a divisional level. Now, in our largest business, Australia Retail and Commercial, we delivered a good margin performance and grew pre-provision and after-tax profit. Home loan revenue grew more than 10%, and while this was a good outcome, the total number of home loans we have on our books fell during the second half. Now, this was due to a couple of factors. Firstly, customers were paying down their loans faster. Secondly, the speed with which we were able to process an increasing number of applications just wasn't sufficient. Now, as shareholders would expect, we took urgent action to fix these processing issues by materially increasing our assessment capacity, as well as simplifying and automating processes. We also appointed our Chief Data Officer, Emma Gray, an expert in data and automation, to temporarily lead the Australian operations team. Now, while it's still early days and there's still much to do, I'm pleased to see improvements in our processing times and a modest return to balance sheet growth. Now, turning to New Zealand, we had one of our strongest performances ever. Revenue and profit were both up strongly, while the investment required to comply with the Reserve Bank's BS11 regulation will finish in 2022, well ahead of schedule. Our bank in New Zealand remains a well-run business, providing critical diversification at an important time. Institutional had another good year, delivering earnings well above cost of capital. As you know, there's been significant work undertaken in recent years to simplify and focus the institutional business, and we're now well positioned to take advantage of the structural tailwinds we see impacting the sector over the coming years. Now, the most significant of these tailwinds is the rapid transformation of how the world produces, distributes and consumes energy. Literally trillions of dollars will be invested by 2050, making it one of the global megatrends impacting banking and society more generally. Now, the reason for this is that for the world to decarbonise, a series of things are taking place. Firstly, the sectors that can decarbonise, such as vehicle fleets and manufacturing, are doing so at a rapid rate. This takes considerable investment, and at the same time, new sources of green electricity, improved battery storage, different distribution networks and hydrogen solutions will be developed with increased urgency. And again, significant investment will be required in these areas. And so this change is also impacting financial markets, particularly around how climate risk itself is assessed, managed, reported and priced. Now, your bank is embracing this challenge, and as Australia's only truly regional bank, we're well placed to shape and support the required transition. Our strength in the natural resources sector means we have deep relationships with those companies that will lead the transition. And with our dominant position in trade finance, debt capital markets and syndicated loans, we're starting from a position of strength. In fact, we estimate we already have a share of around 5% of the global flows in sustainable finance. Now, to put this in better perspective, this year alone, we participated in 81 transactions with a total deal size of $119 billion, while our direct lending to renewables has also increased significantly to $1.4 billion. Now, this isn't just a shift happening at the big end of town. We've already helped finance around 1,000 small and mid-sized business customers to reduce their emissions, such as our partnership with the Clean Energy Finance Corporation to finance zero-emission electric city buses in New South Wales. Now, I also wanted to share today our progress in building a better retail and commercial bank here in Australia. We know that the longer-term forces shaping the industry are leading to structurally lower returns and lower growth, while also driving an unbundling of traditional banking. And this new reality required a different approach, as well as a material transformation in the way we operate. So in response, we've spent the last couple of years working on a program, which internally we refer to as ANZX, which is using the latest technology to help people better save and manage their money. Effectively, it's based on the pillars of financial well-being, such as spending less than you earn, protecting what you can't afford to lose, and paying your most expensive debt down first. Now, the program is progressing well, and we're currently testing our first customer proposition with staff, and will be ready to launch with new customers early in 2022 under a new ANZ Plus brand. Pleasingly, we've absorbed the cost associated with this by driving productivity benefits elsewhere in the group, and probably the best way to describe how all this works is through a short video we've prepared for today. Now, ANZ Plus will be the foundation of the new ANZ. It will also allow us to provide non-bank services and deepen engagement with our customers. Now, much of this will be delivered by the strategic partnerships we're building through our ventures and incubator business, 1835i, which was named after the year in which ANZ's forebear bank first traded. Through 1835i, we only invest where we see a path to acquire more customers, deepen relationships, or co-develop new propositions that we just couldn't develop on our own. So, for example, recently we announced we had entered into a deed to take over Cash Rewards, which is Australia's leader in the buy now, save now sector. It's a great fit with our customer proposition of financial well-being, and it brings over 1 million new customers to ANZ, while also allowing us to provide additional value to our retail and hospitality customers. Through 1835i, we've also invested in 8 fintechs like Lendy and Airwallets, and launched 3 startups, each intended to drive customer acquisition and deepen engagement. Now, another example of how digital solutions can rapidly improve our operations was the launch this year of ANZ GoBiz. GoBiz allows customers to plug the major accounting software packages straight into our systems, reducing the time it takes to get the money into the hands of small businesses from 30 days right down to 2. And while it's early days, GoBiz is making life easier for our customers while also driving solid growth in our commercial business. Now, we've come through an incredibly tough 2 years in very good shape. We're one of the most strongly capitalised banks in the world. We've protected the interests of shareholders by focusing on improving earnings per share. And we know the immediate period ahead will continue to be uncertain. Credit conditions are the most benign they've been in a generation, but that won't last. Customers are demanding more from their banks. Competition is increasing, and regulation is becoming even more pervasive. Put simply, while there are tailwinds beginning to emerge, it will still be a tough environment for some time. And we're laser focused on what is important for shareholders. We will continue to regain momentum in Australian home loans. We will launch ANZ Plus early in 2022, as well as releasing a digital home loan proposition towards the end of next year. We will seed further profitable, high return growth in our institutional business, particularly through sustainability. We'll continue to invest in our commercial franchise, particularly through our GoBiz proposition. We'll complete the regulatory work in New Zealand and we'll continue to improve returns there. We'll continue to prudently manage shareholders' capital and we'll seek to invest for decent and sustainable returns. We'll continue our work on simplification to enable low-cost, high-resilience customer growth. And finally, we'll continue to stand by customers at a time of uncertainty and continue to care for our people. Whatever eventuates next year, we'll be prudent, methodical, and guided by our purpose. So in summary, we're well placed, but the outlook remains uncertain. This will be another big year of change and transformation, but I'm confident we've got the team to deliver. And as such, I'd like to acknowledge my 39,000 colleagues who've been unwavering in their support of their customers and the community in an extraordinarily challenging time for everybody. Our people continue to be true to our purpose and embody the best of our culture, and I really thank them for their ongoing commitment. Finally, while we're going through a period of significant disruption and change at the moment, I should acknowledge it was 70 years ago that the modern ANZ was born, with the merger of the Bank of Australasia and Union Bank of Australia. At the time, this was the largest corporate merger in Australia. It took foresight and ambition, and we'll continue to manage ANZ for future generations with that same spirit. Coincidentally, it was also the time we launched a new motto, Tenacious of Purpose, which resonates with the modern ANZ as strongly today as it did in 1951. Our purpose, to shape a world where people and communities thrive, continues to guide all that we do, and we'll continue to pursue it with tenacity. So with that, I will pass back to Paul.